Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of The Options Playbook, and I'll be your host here for about the next 20 minutes on Options Guide TV. So the markets are just trudging along like nothing's wrong in the world, and we just seem to keep setting new highs in the S&P 500 index, and the VIX index is actually dropping precipitously since we are setting new highs in the S&P 500 index. SPX right now is at 6,162. It's up 21 points on the day, or 1/3 of 1%. Very strong week so far this week. And we also had a couple of solid earning trades that we talked about. We looked at Micron Technology. Micron Technology right now is down $1.64. Still very bullish on Micron. I think it's one of the better stocks in the semiconductor space that, as far as valuations are concerned, it's trading at a very solid valuation relative to its peers. And they had a very good earnings report. Their only problem was that the stock ran up so much over the last month that I think the investors were looking for a reason to sell the underlying stock. Now, it has not. The expected move was about 8 points. And interesting enough, as soon as they announced earnings, I was watching it after the close. The market actually moved the expected move to the upside, but then it gave it back, and it was up a little bit in the extended session. And now, since their earnings report, now we're a couple of days away. They announced on Wednesday after the close. We are now at 124.30, and we're just down a little bit on the stock, which was fine for our skip strike butterfly. We went out, and let's run to the Tradier Pro software right now. And I have the first trade set up. There's not going to be anything there because it's literally expiring worthless today. We did the June 27th expiration. We went out about about the expected move, just a little bit short of the one standard deviation move, which is always about where the expected move lands. Now, remember, the expected move means we're just looking at buying the long straddle ahead of the earnings report, buying the at-the-money call and the at-the-money put. Okay, so we bought the 138 strike call, sold 2 of the 140 strike calls, and then bought 1 of the 144 strike calls. We did this for a net credit of about 15 cents. And I mentioned on the show, usually we want to get about 10% of the margin requirement, which in this instance is $2. We got 14 cents on the show, and there was a moment where it was sitting at around 20 cents. But now we're going to capture that. So you would manage your risk by how many of the contracts that you wanted to do. If the market would have ran up, we had our hedge on. We only had 2 days for the trade to live, sitting at 140. So we also went out and we looked at the July 3rd expiration. And this is Micron Technology July 3rd expiration. We looked at doing a skip strike butterfly there. The downside is that if the market moves too quick to our upper strike, this trade will hurt us more because we have more time premium. We were able to get this one done for closer to the 20 cents based off of what was happening on the show. And that was part of the reason why we went out to the July 3rd expiration, is that we wanted to get a little bit more of a premium. So now I'm going to run over to the what if calculator where I have this trade stored, and we're going to send that to the ticket. All right. And this is interesting. This is very interesting. And I wanted to point this out, is this is now trading for a small debit to the account, which means the market has gone down, and we can actually flip the script here. If you had this position on, you might be able to sell it. And I'd be curious to see. I did not put this position on, unfortunately. I did I have Micron in my account, so I did not trade this position. But with that said, I did the SPX trade this week. I was fairly confident. I was very confident that we weren't going to break through the 6,100 level in the SPX. I felt pretty good about that, and it happened right away on Wednesday. So I got out instantly as soon as it hit our short strike. Okay, I digress. Here we are. Micron Technology, if we flip that script, and we sell, buy, sell instead of buy, sell, buy, we can get this done for a net credit of 13 cents. That means we put it on for 12 cents and we have the ability to take it off, or we put it on for about 20 cents. We got the ability to take it off for an extra 13 cents. Yeah, we got another week left in the trade, but right now this trade is very interesting to see the dynamics between the shorter term skip strike butterfly and the longer term skip strike butterfly. All right. So let's get to this week's, or I guess next week's trade, since it is Friday. We'll be looking at this on Friday. The marketplaces came down precipitously in the VIX index, and I don't think it should be there. I don't think it should be at the 17 level at this point in time. And that is actually a good point right now. And this wasn't the case a little bit earlier, but we saw the S&P. So we got the S&P 500 index up, and we got the VIX up 2%, 41 cents on the day. This was lower a little bit earlier in the day. So that is in general a little bit of a scary sign. When you get the VIX up when the market is up, that means a lot of people aren't believing in the move, but it's only one little indicator. Okay, so with that mentioned, even more reason, I'm going to go out to the July 6th expiration, and I already looked at the Chicago Board Option Exchange futures quotes for the VIX expiration at that point in time. Okay, so let's go back to the what if calculator. Let's grab the VIX trade. We check our boxes. We're going to send it to the ticket. That means it goes down below. We come up here, we click on VIX, and I only trade the monthlies in the VIX. The weeklies just don't have the volume in it. And here's our trade. We're going to sell right now. The market is at the July 16th expiration. Yeah, this has gone up a little bit. Okay, so we're right at about 19 in the futures contract, and it's going to be between 19 and 1950. So right in there, we'll call it 19. Okay, so let's just say this. The ask on the call option for the 19 strike going out 19 days, interesting enough, is 157, and on the put option, it's 134. That means that the call option is a little bit in the money, but if I go down to the 1950 strike, the put option is higher and the call option is lower. So it's somewhere between these two strikes. Fair enough. I think that the marketplace can stay above 18, or at some point in time over the 19 days, we'll get an opportunity to get out of this trade. So I like this trade. We're going to sell a short put spread, assuming that the market will finish somewhere above 18 by the expiration date. We can get this done for a decent net credit to the account. The futures are trading in the VIX right around 19 for this July 16th expiration, which is a Wednesday. That's when the VIX option contracts expire. And we're going to sell the 18 strike put, and we're going to buy the 16 strike put. We're going to get this done for a net credit of 60 cents to the account. Solid net credit that we're receiving for a 2-point widespread. So a decent risk reward ratio for this trade. And that means for every 1-by-1 short put VIX spread that we do, we're going to bring in $61 into our account. Our max risk will be $2 minus that $61, or basically $1.40 to the account. All right, and that's going to be it for this edition of Options Guy TV. We'll be back on Monday, and we'll see where the market is at. I just feel like we're a little bit overbought, considering everything that's going on in the world at this point in time. So looking for a little bit of a downturn by doing the VIX trades. We got some days for it to play out, going out to July 16th. But this will be our trade, and we'll put this one away, and we'll come back and we'll look at it, and we'll see you this Monday for the next edition of Options Guy TV at 11 a.m. Eastern Time. Please tune in, and please join in our reindeer games that we like to call option trading. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.